Hey, ladies and gentlemen, Tobin Smith. My gosh, we have a special guest today on Money Mavericks. I was just talking to Bob Dole about how I first met him, which was back in the 80s. Bob, you're now, what, 110 years old? I'm a little confused.
Yep, next month I'll be 111.
It's really a pleasure to have you on. And I for our audience, what I'd love to do is sort of, drill a little bit into what you have learned doing this for, since the world was created. And is there, you have to have a philosophy, right? You have to have a philosophy. I know this last 3 months, every playbook has been thrown out, torn up, repasted. I've never seen anything like it. But how do you approach where we are right now?
Yeah, so the evergreen comment, perhaps obvious, is have a strategy and stick to it. I've learned over the years and watched guys who chase whatever's hot really struggle. But if you have a methodology that works, apply it over time. So how do you do that now?
Yeah.
Well, you got to be flexible when things are uncertain and willing not to marry anything in particular. I like to say we rent stocks, we don't marry them.
Yeah.
And you can turn around and sell it either because it worked or B, you made a mistake. Look, the world is always uncertain, but I would argue since January 1st, it's more uncertain than usual for perhaps the obvious reasons. Markets hate uncertainty.
Yeah.
And you've just given them a ton of things to worry and bite fingernails about. I am more reactionary as a portfolio manager in these kinds of times than normal. In other words, here's some names I might like to buy, and what's the price I might like to buy them. With this volatility, you might actually get hit. And the same thing on I want to trim these names. What price might I want to do that? So that's kind of what I'm doing in this environment, recognizing that the headline today could be just the opposite of the headline tomorrow.
Yeah, I'm sort of like no in the morning. I like sort of meditate and say, okay, we do our wealth management business. I'm either we're a ultra growth oriented or we're ultra high income, and we sort of mix that, right? But because I do individual stocks, I'm sort of forgetting now that there's this now $5 trillion that are in these advisor models now. Are you guys in that business as well?
Yes, we're in a lot of advisor models and thankful for it. When you have a product that fits the niche, in fact, we sometimes get the list of what's in their models and they say, how would you change it? And we have a guy who's pretty good at saying, why don't you substitute this for that kind of thing because this one isn't working anymore, but this one might.
Yeah, I mean, it really is intriguing for an investor today. The other thing that really got me when we looked at the data was, gosh, you know who was buying while it melted down 20%? It was retail investors. We work through Morgan Stanley, and on that first meltdown day, they were basically on a call to the people like me saying, oh, by the way, the hedge funds were like 3x long going into this, and they're getting margin calls, and we're liquidating over $1 trillion of stocks. That scared me.
But it sounds like when you pinched yourself, probably pretty good buying opportunity.
That's exactly right. The point is, when I feel like I want to just go outside and blow my brains out, I go back into the office and we buy our favorite stocks because it's abnormal for a human being to do that. I think you have to teach yourself. How did you teach yourself to be wise when people are losing their heads, almost literally?
Yeah, just to be disciplined and to stick to it. Sometimes your gut tells you exactly the wrong thing. Or let me say it a different way. The longer I'm in this business, and you just alluded to it, the more I believe sentiment matters. If everybody loves something, it's probably a good day to trim whatever that something is, and vice versa. When everybody's puking it out because they can't stand it anymore, maybe you should buy some.
Yeah, and where are you on the Magnificent Seven or Magnificent 12 or where we are here?
Yeah, so I own bits and pieces of them. They obviously came down a lot and got a little more interesting from a valuation standpoint. And look, most of them have pretty good futures, good growth. Got to watch their cash flow. Several of
Hmm.
them in the last 6 months have dedicated a whole lot more to capital expenditures, and that hurts their near-term cash flow. I'm a big believer companies that are generating free cash flow are likely to be better stocks than ones who aren't.
That's your CPA background, Mr. Dole, right there.
Probably right.
You can look at a financial statement and say, wait a minute, blah, 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 blah. How much cash are you making? And what are you doing with the cash? How about the reinvestment rate, Bob? Is that one for you as well? In other words,
Absolutely, it is. What kinds of returns are you getting? How smart are you with? Are you generating excess
yeah.
cash? And how smart are you in using it and increasing your incremental returns?
All right. So then, therefore, how long have you owned Berkshire Hathaway?
Yeah, long time, long time. Obviously, wish I had owned more of it. It's struggled a bit since the retirement announcement, but over the years, it's been amazing.
Well, yeah, to me, that was always sort of like the touchstone, uh, particularly again when you'd sort of call on brokers, and I would just say, "Listen, I'm selling bonds, okay? So, but do you own Berkshire Hathaway?"
Oh,
And the guys, said,
absolutely. Yep.
and they would say, I don't know what it is." I said, "Just own it, just own it, okay?"
Right.
And then the fact that
Hire
they,
hire Warren Buffett as your money manager. That's what you're.
right, and oh, by the way, he's going to buy back more stock than any human being in the history of the planet, right?
Here, here.
Yeah, I'm with you. All right, so um, we have this strange, weird thing changing every day, but you don't change day. So when you look at versus growth versus value, and I'm sort of not a value investor, quote unquote. In other words, we're looking for 25% growth rates over a 3-year period. So that puts me in a different camp. But you got to balance growth and value. How do you do it?
Yeah, with great difficulty, no question about it. We, as you know, came into the year where value just took off and
Yeah.
growth, four-letter word, and then of course that's begun to reverse. Value still slightly ahead, but if you're in the right stocks in the value universe and the right stocks in the growth universe, you're doing fine. And if you're in the wrong stocks in either, it's a struggle. So yeah, we take Russell's definition. Nobody cares what I think is growth or value.
All right.
My standard is the Russell organization. So in my value portfolio, I will only own names in the Russell One Value. Same thing on the growth side.
That's interesting. And part of that is because they are in an index, they sort of have a built-in buying or demand for the stock simply because they're in the index.
Yeah, well, there's some of that, but it's just what's your definition? I mean, you and
Yeah,
I wouldn't agree with every definition that Russell has, but do we accept that because the world does?
I got it. well, that is cool. So now that we sort of have some clarity, at least for I think like a week ahead is about as far as I as far as I look. um the Trump administration is. I know you're on the board of directors of one of the councils. What would you tell Mr. Trump about tariffs?
Yeah, I'd say, Mr. Trump, with all due respect, hurry up and come to the answer. I come back to markets hate uncertainty.
Uh,
Businesses can deal with good news, they can deal with bad news. What they can't deal with is I don't know news.
yeah,
A lot of what it's been. So let's get to some answers and move forward. Look, I tend to be a free market believer, and therefore I don't want high tariffs. I don't think that's good for anybody in the long run. And I would also say, if I can editorialize,
sure.
a lot of what we got to do is improve our competitiveness. It's not just because everybody's nasty or cheating us. It's because we're not good at everything, and that's okay as long as we're really good at the things that we claim to be good at.
Yeah, I always go back to the idea that somehow, um, I was in Saigon, I don't know, a couple years ago, and toured a factory where they make Nike shoes, and talked with the manager. And I said, so what do these people make per hour, and what per day? Well, they make about $3 an hour. And the cost of living to have an apartment for a family of two and two kids is about $500 a month. Both parents work, and if the kids are older, they're working
They're
too.
working too. Yep.
And it works. Then you go to Bangladesh, and that's $3 a day.
Yeah.
And I
Yeah.
mean, and so that it's ludicrous. Doesn't help our economy in any way to be putting shoes together in Des Moines, Iowa.
Here, here. You're so right. So let's be really good at what we're like. If you're tomatoes and I'm string beans, we are better off if we're trading with one another rather than you have to eat string beans all the time and I have tomatoes all the time. Let's find a way to trade. That can improve the standard of living for everybody.
So saith the Dole. I like it because you know it's almost. I mean, again, it's not a political show, whatever. But it's weird that. Well, first off, God bless Scott Bessent.
Oh boy,
Um,
thank the good Lord we have him.
thank the good Lord.
Yep, yep.
I have I've been to DC for 30 years and have a lot of GOP friends and et cetera. And one of the guys, Kevin, who called me the day before, basically Bessent ran in the Oval Office and said, are you crazy? Time out, right? And he said that basically Bessent came in and gave him the facts, and then the GOP guys came in and said, "So you understand with the 28% of approval rate, we're not really looking at good next year. So all this stuff you're doing would then go away. Is that what you want?" So Saint Bessent is what I call him now, Bob.
He's made a big difference.
He's making, and I guess if he bought a house. I lived in DC for a long time. He bought a house down the street from me. I lived in the ghetto of Georgetown, and he just bought a house for $23 million. Wrote a check for it. Not really a mortgage. You know what I mean?
Right,
And
right.
it blows me away that a guy who's so accomplished, et cetera, would come into this sort of show. I left off the first part of that phrase, and really, has been the savior of our economy. Am I overstating?
No, not at all. He's often the adult in the room. I hope he stays at Treasury. These rumors about him going to the Fed, please stay in Treasury. You can have so much more influence on our country and economic and monetary policy. We need him
No
in that
question. And it's the presidents get the headlines, but it's the number 2 and number 3 people that get stuff done, just
Yes.
like any organization, right? And
Yes.
those people are the ones that would have texted me and called and said, "Toby, we are so fortunate to have this guy." All right,
Yep.
so I have
Oh,
some predictions here, which you've now thrown out. All right.
Actually, we're having a pretty good year. We're getting most of them right so far, which is
All right, okay. So what are the ones you got right, and what are the ones you got wrong?
well, the right ones are market's going to have a double-digit percentage decline at some point. Earnings aren't going to live up to expectations. Our sector calls been right on. Doge would not deliver anywhere near the numbers that were expected.
I'm
They're
shocked,
among
Bob.
the things
Bob, you're a CPA. I'm shocked that they didn't cut $4 trillion of spending out.
It's the numbers just don't add up. If you're not willing to touch Social Security and Medicare and Medicaid and veterans benefits and defense spending and net interest on the debt,
Yeah.
there's not that much left to cut. And by the way, if I could editorialize,
Sure.
if we ever get serious about fixing the debt and the deficits, there is only one way to do it: entitlement programs. Social Security was put in place when we had this many workers and this many retirees.
Yeah.
Now we have as many retirees. We just can't afford it anymore. And so we have to fix it. Stepping on toes to get it done. That's the only way we're going to fix the problem.
Yeah. And, it's I don't know what metaphor, kicking the can down the road is. That's my favorite one this week. Why have the markets sort of, gone to sleep about this issue?
I think because there's no immediate reason to say, oh, we're hurting over there because of this. It hasn't hit us yet.
That's a good point.
The bond vigilantes will take interest rates up, and or the dollar will collapse, and or our trade problems will become a whole lot worse. And at some point, we can't grow anymore. And we'll wake up and say, it's quarter to midnight. At midnight, we're going to self-destruct. Let's fix it. And then somebody will say, I know how to fix it. The entitlement programs will say, there's my guy. And can't see it today, but someday we'll do it.
I was going to say, Bob, are you dreaming out loud?
Is it a dream or a nightmare?
Yeah, I've been in DC for 30 years. um, it's, again, not just wait. I mean, it's out of the economy, but it's called a company store for a reason. And people, who get into it, particularly people who are highly paid consultants. I was once a member of a congressional golf club, and it was no fun. You go there, and there was a consultant, military consultants. Nobody had a job. They were all lobbyists,
Everybody
basically.
lobbies everybody else. You're right, Toby. That's what it is.
Yeah, and I was like, okay, now I'm starting to get this thing. I mean, this is like $150,000 membership, and these guys have 5 memberships, right? I mean, there's a town called Potomac that looks like, English tutor homes just got pushed into the river. Um, yeah, it's entrenched. I don't know how we would unentrench it. Do you?
Yeah, only when our backs are to the walls. Back to what you
Yeah,
said, why is the market not paying attention to this? Because it's not hurting anybody particularly today. It's
yeah.
got to be front and center, and then we'll do the hard stuff. But I don't know if that's this year, next year, 10 years from now. Don't know, but it'll happen.
Well, we were talking before the era that I'm going back to Paul Volcker in '82. We have this massive inflation. We had the oil crisis. Blah blah blah. Paul Volcker comes in and takes rates up to 14%. That meant a bond that you had like lost half of its value if you didn't hold it till the perpetuity. And maybe we need another Paul Volcker, Bob.
Very well could be. We need somebody who's going to have the clout, the power, and the willingness to stand up when everybody's going to hate him or her.
Yeah. Well, uh, here you go. You may want to smoke this because I don't see anybody who's going to be doing that. All
Not
right.
that right.
So stocks. Let's talk some stocks, brother. What is highest on your list these days?
Well, I'm still enjoying the financials. They're getting hit in recent days a little bit more, but they're cheap. A lot of the lending this cycle took place outside the banking system, so I
Right.
don't think their balance sheets are as a difficult shape as they often are at this point in the economic cycle. They're the biggest beneficiary of deregulation. So we like the financials, financial services, some of the big banks, lots of ways to play the financial sector. And then I come back to a more obtuse but honest answer to your question. I want companies that have positive and growing free cash flow and have decent levels of profitability. You can define that as a return on equity. If you can get that pair right, I mean, you're sort of talking quality, are you not? Decent
Yeah.
cash flow,
Yeah.
good ROEs. You can win over the long term in those kinds of stocks, and you can find them in different sectors. Financials is a favorite at the moment.
Yeah. I sort of hear you saying, "Hey, Toby, I'm sort of in the get rich slow camp. I'm not in the get rich quick camp." Right?
Yeah, well said. I mean, I think we've all observed people who try to do that. Some do, the vast majority don't. They flame out, and you've got to be methodical, you've got to be disciplined, and you got to stick to it.
Yeah. So your allocation right now in your largest fund, can you give the audience an idea of that?
Yeah, so in our equity only funds, we're
Yeah.
always fully invested,
Okay.
leaving the financial advisors, if they give $100,000 of their clients' money to us and say put it in a large cap core US, they don't want cash. They're already taking care of that elsewhere.
Right.
In our allocation funds, we have a little more than usual cash. Look, stocks have ripped higher in the face of slowing economic growth, the tariff thing that we've talked about for some time. Now we have some uncertainty around oil, and stocks are expensive. If they were more reasonably priced, I'd be more excited. But 22 times earnings when you got problems, risk reward's not great.
Yeah, that's an interesting. I mean, it's an interesting point. To that point, we've done quite well owning German stocks. We've done
Yes,
quite
we
well,
sure.
outside, and those were. I'm not a value investor, but at a 7 PE for a bank that is paying a 8% dividend, and the dollar is now depreciating, so their value is going up. I mean, that is sort of like, I call that the Stevie Wonder bet. Anybody could make that money doing that because you have all three parts of the equation working for you.
Yeah, I see way too many US portfolios, individuals and institutions that still have, too many high growth, expensive stocks. Have a little value in your portfolio. For sure, have some international. It matters. Hasn't mattered much in the last 10 or
No,
15 years,
the last
but
20 years
in the
it
last
hasn't mattered, but
15, 20 weeks, it's made a
yeah.
big difference.
Yeah, well, yeah, so my company's called Transformative Research, and we're about transformational change that happens at the equity level, at the macro level, at the micro level. And Lord knows we've had some macro, change I can't remember the last time I owned the DAX, the German
Yes,
index.
yes.
I can't remember the last time that at first I've never owned Japanese stocks. I still don't understand that whole thing. But France, and my favorite one, because I happen to have an apartment there, is Spain. I mean, Spain has been Spain.
And amazing.
It, well, yeah, but you go to Spain, and first off, stay away from Barcelona, and unless want to be trampled or hit with a water gun, right?
Yeah,
But uh, it's crowded. Why? Because it's relative value. The
yes.
apartment I have in Madrid, I couldn't rent my bathroom out here in Scottsdale for what this 800 square foot, and it's awesome. And you walk down and everybody's happy, and there's pero español es muy favorite lengua de la mundo. But I'm
There
just
you
telling
go.
you that people need to, as you say, look outside the United States.
Correct,
And
correct.
the other one that gets me is the outsourcing advisors just going to the models. Do you think that's going to continue? I know there was a thing in the Wall Street Journal today, like $2 trillion have moved that way.
Yeah, it's a popular thing to do. And look, if you stay on top of it, it can be to simplify the dialogue and the business. And if you have the right mix there, those could do just fine. But you just got to look at it and examine it from time to time. You can't put it to sleep in the corner and wake up 10 years from now and say I did the right thing.
Yeah, yeah. I mean, the idea of passive almost feels like, okay, well, you're assuming the world's not going to change in the 5 years or 10 years. You're
Right.
assuming that technology is not going to change. Obviously, we're big investors in what I call the AI tech data center tech
Yes.
stack, and that goes all the way down. I mean, uh, this little company Vertiv, I'm sure you've heard of them,
Oh yeah.
that makes the refrigerators for those stacks. I was at SMCI last year, and for a completely unrelated reason. And I said, well, what is that, all that stuff in the back of your warehouses? Those are Vertiv coolant systems. And by the way, these GPUs only put off 40 times more heat than the other guys. And I'm like, really? So I said, well, let's go through this, literally through the stack of their containers, 8 foot, et cetera. Man, so we're long that. Do you have any favorite AI stocks at this point? Got a minute left.
We own that one as well. I would say a lot, as you know, a lot of
Yeah.
the pure AI stocks are very expensive.
Yep.
I think we can move to companies that have, instead of A plus, B minus, but are much cheaper. IBM, for example, been a good
I was just
stock.
gonna say you
Why?
beat me to it.
It's in AI, it's in the cloud, and it's a much cheaper stock. And eventually, it's not going to be just the AI or the secondary stock. It's going to be the users of AI, and that's you and me that are going to benefit.
All right, ladies and gentlemen, you have had a treat. This is Bob Dull. He is the CEO, COO, and I don't know, see something else with Crossmark. It is an absolute honor and pleasure to be with you, Bob. I hope to see you again soon.
All the best. Buy low, sell high in the meantime.
Ciao, ciao. I like it.